Hey, good morning, everybody. How you guys doing? I do apologize for the slight tardiness today. I got a great workout in, and to be honest with you, I just didn't want to leave the gym. I was getting it in, so I'm not sad about that at all. Today, uh, I want to follow up on something that I started last week. Last week, as you all may know, I gave a market indicator of my home county of Wayne County, Michigan. And I kind of told you, based on the indicators that I typically use in my appraisal business, how our market is doing. Um, and as I thought about it over the weekend, as I discussed last week, sales price alone is not something that most real estate professionals use. I know it's the one that people talk about in daily conversations, and it's usually the one that's publicized most on social on in various media outlets. But the reality is, uh, trying to figure out how the market is doing, whatever market you're talking about, is usually dependent upon more than one indicator. Like I said, sales price alone does not determine, and where it shouldn't determine, how a market is going. In a vacuum, it's not really a good indicator. So just to recap, some of the other indicators that I tend to use as an appraiser when I'm analyzing a market, I look at days on market, the actual housing, the total overall housing supply, the list to sales ratio, or the sales to list ratio, as I like to term it, the amount of seller concessions, the amount of distressed properties in the market. Those are just five additional factors that we use. We probably use one or two others, but those are probably the most prominent, in addition to sales price, of course. Um, but again, even when we're discussing these ratios and these numbers only become important when you look at them in relation to another variable. So taken in a vacuum, they mean absolutely nothing. They only become important when you're comparing them from, say, this year to last year, or last year to the year before that. That way you can see a trend. Other than that, it means nothing, right? If I were to tell you that the days on market is 50 days in my area, you can take that one way, but in all honesty, it means absolutely nothing if you don't if you don't have knowledge of saying, hey, last year this time the days on market was maybe 100 days. See, now you got something to compare to. And that's the whole gist of this. But today I want to talk about a special one, and it's called the sales to list ratio. And I want to talk about this one first because this one is really dependent upon, and it's really dependent upon one, sentimentality actually, and how well people feel, quote unquote, about the local real estate market. So, for instance, let me give you the definition of sales to list ratio. Well, that's pretty straightforward, right? We take the sales price, whatever sales price property sold for, and divide it by whatever it was actually offered for or listed for, right? So if you have a property that sells for $90,000 and it was offered for $100,000, its sales to list ratio would be 90%. Easy, right? Again, in a vacuum, that doesn't really mean very much. But there are a couple of other factors that go into sales to the list price in particular, right? Because I like this one because, one, we can get a feel for how the buyers feel in a given market, one, and two, we get a feeling of how sellers are feeling about that market. Okay. So for instance, in some markets, in sellers markets where sellers are typically are leading the way, the sales to list ratio is often over 100%. So what does that mean? That means that, I going to this $100,000 example again. I have a home. I'm going to offer it at $100,000, but I get a flood of buyers, and the property ultimately sells within 2 days, and the property actually sells for $110,000. that means my sales to list ratio is actually 110%. That means it sold for 10% more than I actually offered it for, right? That's a key sign that we're probably in a seller's market, right? Because what's happening is the asset, the house itself, is being valued. The buyers want it so much they're willing to pay more than what the owners are asking for, right? Now it also happens in reverse. You know, when you have so many, and you saw this a lot a few years back, when you had so many choices on the market, when buyers can be picky, ridiculously picky, right? So a seller would offer a property for $100,000, but ultimately after, you know, they were just happy to get 80, right? Because they just wanted to get from up under the house and they wanted to sell it and be done with it. So in that situation, you have the $80,000 divided by 100 would be an 80% sales to list ratio. Now, I'm not going to tell you what from my vantage point, the ratio, the actual number doesn't matter as much as a trend, right? Because some areas, the reality is, some areas are typically, you have buyers or sellers that tend to be very optimistic. You see this a lot in coastal areas where, land is land and it's only so much of it. So they feel that, hey, I own some oceanfront property. And since I own this oceanfront property, it's got to be worth more than whatever, right? I mean, it's worth $1 million because I think it's worth $1 million. That may or may not be true. You know, it's up to the area buyers. But here's something to consider, though. During the recession, our recent recession back in 2007, 8, and 9, and some of 10, you saw sales to list ratios probably closer to like 30, 40, 50%. And the reason for that was because home sellers were completely upside down in their mortgages, and they were making deals with their lenders so that they would short sell the property, right? And here's basically the short sale is really simple. The homeowner goes to the bank and says, look, Mr. Lender, I know I bought this property for $100,000 and I have a $100,000 loan, but it's not worth, but I can't sell it for that right now. Will you take $50,000 for it? And as opposed to, and the banks and lenders, they don't necessarily want to do it, but the reality is this: you can either have $50,000 in your hand, or you can have zero when I just walk away. That's the choice. So in those situations, you saw list to sell ratios that were, nearer to $50,000, and some, or 50%, list to sales ratios that are closer to 50%. So for me, so let's wrap it up. So generally speaking, one of the major things that I do look at sales to list ratios as a trend. And I say that because, again, going to my initial example, I need to know if the trend of sales to list prices are going in a certain direction, because that, like I said, that is an indicator. If the trend is going higher and exceeding 100%, then I know we're headed towards a seller's market, right? That means that, generally speaking, that means the economy is doing really, really, really well, and home prices are probably going to start skyrocketing, right? Because, that's just the way things happen. So I hope this was useful, and this was one of the, and like I said, it's just one of many tools that we use when we're analyzing markets. But hopefully you can use it for your own personal situation in whatever industry you're in. And if you have any questions, feel free, drop them right down in the comment box. And I will see you guys on Wednesday. Peace.